October 25th, 2024. Today was kind of interesting. We had a parabolic wedge rally and a buy climax, and then the second leg up. In general, whenever you get a parabolic wedge, you're in an 8-bar bull micro channel in the open, so 8 straight bars without going below the prior bar. So you know that there's going to be a second leg up, and you know there's going to be buyers below bar 8 for a second leg up. However, after that, you have to kind of start to think about what the remainder of the day is going to look like. And today is a good example of an endless pullback. And you can see, the hint of the endless pullback is when the market starts to form a relatively tight channel down. We had 5 straight bear bars here, and we started to form a pretty tight channel down. And then we essentially got a downside breakout. We were unable to break out below the low of the day. And then you can see, obviously, we did get the breakout 45, 46, and a measure move down. Bar 1, a bull bar, but big tail on the top, so not as bullish as it could be. It's notable that we kept the gap open with yesterday's high. So you can see the bulls who were buying the open of the day, they were trying to make sure this gap stayed open, and they did a good job at the beginning of the day. Something really interesting about bar 1, the open of bar 1 was also the low of bar 1. So you have to, this is sampled data. So sometimes the market will show that the open of bar 1 is the low, and it actually wasn't. So you have to go on the CME futures website to find if it actually was the low, because CME is the person, or CME is the company that creates this trading instrument. So I went on their website, and it turned out that bar 1 actually was the low of the day so far today. So why is that important? Well, because the open of the day is only the low or the high of the day about once a year. So right off the bat, with bar 1 being the low of the day and the open of the bar, there's an increased chance that we're going to go below bar 1 at some point today, because only about once a year is this low going to hold. So it's pretty rare. Probably not going to happen. Bar 2, an inside bar. The bulls, they see a high 1. They hope the gap up is a bull trend, and that bar 1 is follow through. So gap up and follow through for the bulls on bar 1. And an inside bar, a high 1 buy on bar 2. The issue with buying above bar 2 is it's a big doji bar. So there's a large tail on the top, and it's really hard to look to buy above a bull bar when there's a huge tail on the top of it and it doesn't close above its midpoint. The bears are hoping it's a micro double top, 1, 2, but it's really not a very good sell below a bull bar. There's going to be buyers below bar 1 if we get there. It's just something. Okay. Bar 3, a bull bar closing near its high. It's good for the bulls. We're probably going at least a little bit higher, and this is enough of a first leg that we should get a second leg sideways to up. But bar 3 unable to close above the breakout point on bar 1, so some traders would wait for more follow through. I don't trade the first 5 or 6 bars of the day, but I thought that bar 4 was a credible signal. You can buy the close of that, just looking for a second leg up. So you buy this close, and you're looking to get a measured move up here, and you would have been filled on bar 11. So bar 4, another bull bar, but again, a large tail. 1, 2, and 4 all have large tails, so maybe not as strong of buy the close as you'd like it to be. However, it is still by the close because we haven't had a bear bar yet today, and we're in a 4-bar bull micro channel. Bar 5, an inside bar. It's another high 1 for the bulls. So bar 2 is a high 1, and bar 5 is also a high 1. So we're probably going at least a little bit higher. The issue with buying the close of 5 is that you're starting to form a parabolic wedge. We have a rally on bar 1, and then 2 is a much smaller bar. The body is tiny, so it's a pullback. 3, 4, rally, and then the body is tiny, so it's a pullback. And then 6, 7, a rally, and then the body is tiny, so it's 3 pushes up. There was one other parabolic wedge that formed today that was pretty obvious. So I'll pause the video and try to figure out what the other parabolic wedge was. If this was the parabolic wedge, if the pattern is rally and then tiny bar is a pullback, rally, tiny bar is a pullback, rally, tiny bar is 3 pushes up. What is the other area in the chart today that we had the similar pattern? If you thought that 45 through 51 was that area, you were correct. We had a sell-off 45, 46, and a deep pullback 47, a large tail, which counts as a pullback, and then 48, 49, the second leg down, and then a pause bar on 50, and then a really climactic, the best looking bear bar in 30 bars coming at the bottom of the bear trend, and the third leg down after the pullback on 50. So we had parabolic wedges. What do parabolic wedges lead to? They usually lead to minor reversals in the other direction. Obviously, it led to a more major reversal in this particular case, which can happen sometimes with buy climaxes. But you can see it led to a minor reversal up 52, 53, and then we got the second leg down for the bears on 54 through 57, and then obviously the bulls rallied back to the bar 53 close, since 52 and 53 is big enough for its own second leg. Anyways, bar 6, a bull bar, but tail on the top. Some traders would argue we have a wedge 1, 4, 6, so that is a possible wedge, and they think that we're probably, if we do break out to the upside, it'll be climactic, which is true. I think 7 is a buy climax, so it's hard to want to buy the close of 7 when you're buying so high in what is probably going to end up becoming a trading range. Why is it probably going to be a trading range? Because most days are trading ranges. So just by default, it probably won't be a bull trend day. But we do have 2 open gaps. So we have an open gap with the 1 high and the 5 low. And then we have the open gap with yesterday's high somewhere in this area. So we have 2 open gaps, which is what the bulls need for a possible bull trend from the open. So for me, I am keeping that in the back of my head. And I want to see how the pullback looks. If we get a pullback that isn't that deep and it doesn't, basically violate the gap with the 3 high and the 5 low, then there's an increased chance of a bull trend day today. 8, a inside bar, a bull bar, but I don't know how much higher we're really going. Again, it looks like a parabolic wedge to me. However, there's going to be buyers below. I would say, at least 80% chance that there's buyers below bar 8 scaling in lower, probably even a little bit higher. It's very, very small chance that if you buy below bar 8, you're going to get trapped and not have a chance to at least break even on the trade. 1 second. Bar 9 traded below bar 8. So you have to be expecting buyers below 8 during bar 9, considering the fact that we have an 8 bar bull micro channel. So there's going to be traders looking to buy down here. So buyers below 8 during bar 9. 7 is a buy climax. And so you have to be expecting buyers at the bar 7 low if we get down there as well. 9, bear bar. But again, buyers below 8 looking for a second leg up, probably back to around the bar 8 close. 10, a bull bar. Good for the bulls. It's a high 1 buy. Really not all that great though in this particular context. High 1s are probably going to lead to deeper corrections. I think this is a situation where I would be expecting a deeper correction. 11, another bull bar, breaks out above the high of the parabolic wedge, but you have to ask yourself, how much higher are we going to go rallying in this type of way? Probably not that much higher with all these pullbacks and with this far from the moving average. The reality is we're going to pull back. And the thing you have to do as a trader is determine if the pullback is, not that big of a deal and probably still might lead to a bull trend day, or if the pullback's too deep and it might lead to a trading range day, or if the pullback turns into a tight bear channel and becomes an endless pullback. And the entire key, I think, experience is the real key. But what you're looking for is tight channels down. So when you get a rally on the open, it's a possible bull trend day, you should start to become suspicious of an endless pullback if the channel down is really tight. So just try to, tight channels are actually a really, really important concept in trading. And I think it's something that, if you're newer to trading, you have to study a lot. It keeps you out of buying these types of closes because the channel down is too tight. And, it keeps you out of, looking to buy in this area, 21, 22, 23, thinking, well, we're going to have to get a second leg up from this, right? Surely. But the reality is the channel down is tight, and this could lead to an endless pullback. So 12, an inside bar. It's, a low too short for the bears, but no one really wants to sell below bar 12. It's not a very good trade. So it's a couple legs up and a low too short 12. Still a low too short 13, an inside pattern. Probably buyers below, considering the fact that it's just in general a low probability short. In theory, it's a low 2 and you could sell it for a swing, but I think it makes way more sense to just wait for follow through. Reality is, if you sold below 13, even if you sold below 13 and hold all the way to the low of 57 and exited at 58.35 and just made the maximum today, it's really going to be tough to keep taking trades like this over and over and over again because they're not very high probability. And even worse would be if you took a trade like this 3 or 4 times and then you sat out of this one because you didn't have the heart to do it again because it's low probability and you don't want to keep losing it. The problem with those low probability trades is they just start feeling like a donation. And right when you decide not to make the donation, that's the trade that isn't a donation. So that's kind of the issue with low probability trades. 14, another bear bar. We have 3 straight bear bars, large tail 12, 13, 14. So good for the bears. The fact that we have 3 consecutive bear bars means we're probably going to get some sort of pullback here. 15, an outside down bar. So it's possible second leg down. The bulls are hoping 12, 13, 14 is the first leg. We traded above the high one on 14 during 15 and pulled back 15. The bulls are hoping to get a good looking high two, maybe 16, and get a possible swing up. However, the reality is, that's four straight bear bars. We're probably not going to get a swing up. We probably need to test the moving average. 16, another bear bar. So right off the bat here, we have 5 straight bear bars, and that is way too many. This should not be looking like this if this is going to be a bull trend day. So right here, when you see it's probably not a bull trend day, I think most traders can decipher that after 5 straight bear bars, it's probably not going to be a bull trend day. Well, what do you have to think about? Well, you have to think about the profit targets of the bears. So how far are we going to pull back? Well, if it's a trading range day and not a trend day, what happens on trading range days? Gaps close. So look at the 3 high and the 5 low. That gap might close. Look at yesterday's high, right? All the way down here. You see that it's not a bull trend day, and you start thinking it's a trading range day. You're going to have to start thinking about this high because this is a very real area that the market might get to. So again, when you're in the beginning of the day, I always look for gaps. So I'm looking for possible trends. And if I see a lot of gaps in one direction and determine the trend isn't that strong, I'm now looking for those gaps to close. 17, a bull bar. It's a high 2 for the bulls, but no one wants to buy after 5 straight bear bars. Probably buyers below, probably sellers above. 18, you can see there were buyers below. We might get one more leg sideways to down. Sellers above 18 during 19. So the bears who sold the close, the bulls who bought close maybe 17, scaled in 18, using 19 to exit. Large tail on 19, which is pretty disappointing. Again, the bulls unable to get bull bars closing near their highs after the pullback, right? Sometimes when you get a pullback that ends up, getting trend resumption, you get a good looking bull bar and then it'll pull back, and a good looking bull bar and then it'll pull back, and another good looking bull bar and then it'll go. Here, we're not getting the good looking bull bars that we need to get in order for this rally to be this rally to be successful and get a strong second leg. 20, a doji bar. So 19 and 20 are doji bars. We're basically we're reaching the moving average now, but we haven't been below the moving average since bar like 68 or 67 yesterday was the last time we got a close below the moving average. So I'm not willing to sell the first close below the moving average. But what does it mean, the fact that it's been 30 plus bars since we've had a close below the moving average? It means the bulls should buy the first time we go below the moving average. So you should be looking at this as the bulls should probably buy the first time we go below the moving average. However, it might be an endless pullback at this point. And if it is, and we get consecutive bear bars closing below the moving average, we're probably going lower. So 24 is the bar that the bears should not have allowed. 22, I think I was on 21. I'm going to start at 21. I think this is where I was. 21, a bear bar closing near its low. It's possible 1, pullback 2, pullback 3. So the bulls are hoping it's 3 pushes to the moving average. The bears are looking for an endless pullback. 22, consecutive bear bars, but again, right on the moving average. So I would probably just rather wait than do anything here. 23, a bear bar closing near its low, and it closes below the moving average, but I think 24 is the decision bar. Are bulls going to give up on the close of 23 below the moving average, and we're going to start to sell off, or are bulls going to buy, and we're going to get a good looking reversal to the upside and probably start to form a trading range? And you can see on the close of 24, bulls gave up. So they didn't want to sell the first close below the moving average. They ended up giving up on bar 24, and now you have 5 straight bear bars and consecutive bear bars closing below their midpoints, below the moving average. So you can sell the close of 24. 25, another bear bar, an inside bar, low 1 short for the bears, closing somewhat near its low. 3 straight bear closes below the moving average, but still a doji bar, and it's still a low 1 short. So in general, should be buyers below, but not really a very good looking buy below, if you ask me. Too many bear bars. 26, another bear bar, closing near its low. We might be getting towards the bottom of the trading range. However, you have to expect we're going to go below the 1 low. This is something that happens a lot too in trading, is you get close to the magnet, and if you're selling, you're hoping we get here, and then we kind of bounce and the market will force you out, and then it'll go to the magnet. Basically, it trapped out all of the bears who were shorting for any reason. It trapped them out in this area, and then they had to get back in, and that's part of what's causing the sell-off. 28, so I think it was on 26, so big bear bar near the low, but then a reversal up 27. It's a couple legs down, and it's possible the bulls want a double bottom and then, a rally, but what are the odds we're going to rally after this tight channel from 12 to 26? Not very good. We also have a bear micro channel from 19 to 26. So sellers above 27, even though double bottom 1, higher low double bottom. So 28, a bull bar, but the bulls who bought for any reason, they're scalping them quickly. And we rallied to the bar 26 high, which is the most recent sell Climax high. So you have to be expecting sellers there. 29, a bear bar closing near its low. Do you sell for a swing? Now, you maybe could, but with a wide stop, it is a good looking bear bar closing near its low, but 27, 28 might need a second leg up. So some traders might take the short with a wide stop. 29, just want to check something. Did we go above the 25 high? Yes, one tick. So this is the, possible, again, high ones usually to pullbacks and then trend resumption. And it eventually did end up leading to a wedge pullback and tested above the high one, or the low one short, sorry. So tested above the low one and then got trend resumption basically. So 31, an inside bar. So we have consecutive, or sorry, we do not have consecutive trends. It's 30, I think I was on 30 actually. 30, an inside, not quite an inside bar, failed breakout below the low of 29. Bulls are hoping double bottom 27, 30, and for a swing up, but not all that likely with the tight channel down. 31, an inside bar, a high one buy for the Bulls, a low one short for the Bears. We did not trigger above 30. Some Bulls would exit if we did go above 30. Some Bears would exit if we went above 30. Instead, we did not. 32, an inside bar, so II 31, 32, probably going at least a little bit higher. But we'll see. The one low is going to, I don't think one is the low of the day. It's also, we haven't broken out of the 18 bar range yet today. And I think we're going to go below the one low. 33, a bull bar, but a large tail on the top, small bull doji bar, probably buyers below. It's a bad low one short. Buyers below during 32 and a bull bar 32 closing near its high. This is also important. The fact that 34 traded below 33, that decreased the odds that the first leg needed a second leg, because the reality is 35, 36, 34, 35, 36 is the second leg trap since 34 went below 33. 35 consecutive bull bars closing near their highs, closing above the moving average. Good on 35 for the bulls, but they need more. 36, another bull bar closing above the moving average, but it just looks like a second leg trap. I think it's an area where the bulls need another bar. They need 37 to be another bull bar, and if it is, then you can potentially buy. But when you get a tight channel down and then 3 straight bull bars, because yes, it was 5 straight bull bars, but we traded below 33. So you get tight channel down and then a 3-bar micro channel. It's a terrible trade. I'll prove it to you. Yesterday, a tight channel down and a 3-bar micro channel fails. Yesterday, a tight channel up, a 3-bar micro channel down fails. So anytime you get a tight channel and then a 3-bar micro channel in the other direction, don't sell the close of it, because you should be trading stop orders, not limit orders. But it's almost always better to sell the close of something like 36 than it is to buy the close. 37, outside down, a bear bar, somewhat of a decent close, but probably going at least a little bit lower. 38, consecutive bear bars, so 37, 38. 37, 38 is enough for a second leg sideways top. We might have to get back to the 36 close since it's 5 straight bull closes, but the second leg could be pretty delayed here. 39, an outside bar. That's probably the second leg for the Bears. We might not get back to the 36 close if we get a couple bear bars closing near their lows. And 40, a bear bar closing near its low. Some traders would argue it's a second leg down, and I would agree. So the bulls are hoping rally to 36 and then 2-legged pullback and then higher low major trend reversal. Except for the fact that, 40 is a bear bar closing near its low. And if we start to go to the downside and we don't rally back up to the 36 close, there's going to be a lot of bulls who are trapped in. And those bulls that are trapped in are probably going to get stopped out if we start to break out to the downside. And that's going to add fuel to the fire. 41, a bull bar. Hey, let me grab some water real quick. A bull bar, a doji bar. You can see there was initially buyers below 40, but it's a swing trade, so it's okay to hold short, probably stop above 37. 42, another bear bar. So the bulls are hoping it's 3 pushes, 1, pullback, 2, pullback, 3, except what do you notice? The channel down is tight. It's the same way the channel down was tight. So it might be 3 pushes, but it also could lead to a breakout. The only way you know if it's a 3 pushes, and it's going to be a wedge pullback is if we can get a good looking bull bar closing near its high. But until then, we're still always in short. This did not flip the market to always in long. The bulls needed one more bar. So we've remained always in short this whole time, and the Bears are on a short below 40. So the bulls pretty desperately need a good looking bull bar closing near its high to convince traders that this is in fact a trading range and not going to break out to the downside. 43, another bear bar, but a large tail on the bottom. 44, again, this was kind of the area where bulls needed to get a good looking reversal, and they're failing. So the remainder of the bulls end up giving up on their longs and dumping out of their longs, and that's what causes 45, the big bear bar, breaking out below the one low, which was a pretty obvious magnet. 46 consecutive bear bars closing near their lows. Very clear leg one, right? If you're looking at this and you're thinking 45, 46 is a third leg, you got to rethink a little bit. Look at the size of the leg from 37 and 38. Look at the size of the leg on 40. Does 37 and 38 and 40, those individual legs, do they look anything like 42 through 46? No, specifically 45 and 46 break out below the low of the day, which is an important support area. and a follow through bar. So any bull who bought the low of the day, betting that this was a trading range day, is all of a sudden trapped. So really not good for the bulls. We're probably going at least a little bit lower. Might get a measure move down. 47, another bear bar. Disappointing that we got a huge rally here. It means it's probably not going to be a giant bear trend, but we could still go down for a couple more legs. The reality is there's going to be sellers above here. 48, an inside bar. We didn't trade above 47, a low one short for the bears. Some bears would take the sell or just hold short if they already were. 49, consecutive bear bars. 48, 49, probably going at least a little bit lower. A pullback 50, right? One, pullback, two, pullback, and then a dump on 3. 51, giant bear bar closing near its low. Back into this trading range from yesterday. Pretty clearly climactic bar, third leg down, 14-point bar. We haven't even had a 14-point bear bar yet, and we're 40 bars into this trend. So probably buyers pretty soon here. Today, what are the things that you should look for and evaluate in your trading if you're not a consistently profitable trader? And I'd imagine if you are a consistently profitable trader, you're probably not watching this video. So if you're watching this video, you should probably pay attention to what types of, your trading plan, what types of trades are you taking? What's the environment that your trades are taking, or that you're taking trades in? Are you taking trades? Are you buying in these trading ranges and selling in these trading ranges and, doing a lot? Are you skipping out on this and just taking trades in here and just taking trades in here? Because that's a big red flag in your trading if that's what you're doing. You don't want to be taking trades over here. If you missed all of this and you end up just trading in here, that's a problem. You have to rethink your trading strategy. You want to be trading when it's clear. In 45, 46, the market is clear. It's scary because the risk is big and it's moving fast, but it's clear. So you want to be taking trades. Go look at your past 50 trades. Just be simple with it. Am I trading in a trend or a trading range? Trend or trading range? If you find you're constantly trading in trading ranges, you probably want to be trading in trends because stop orders are good in trends and they're less good in trading ranges. 52, big bull bar closing near its high. The thing about 52 is it's good enough for a second leg, but that it's the big bar, big risk kind of problem. So if you're buying here, you're not putting a stop below 52. You're probably using some sort of measured move and you're buying more below 52. 53, consecutive bull bars. Good for the bulls, but we're probably going to pull back pretty far here. Reason being, the bear who sold the close of 51, it wasn't smart. It was a sell climax, but it's still a target. So we're probably going back into this area. 54, a big bear bar closing near its low. Some bears could sell, but the reality is 52 and 53 is the end of the bear trend. Even if we go a little bit lower, when you get this 60% chance that you're going to test the high of the bar. So when you get this sell climax type thing, 60% chance, by that I mean biggest bar late in the trend, 60% chance the trend's over, 60% chance of one more leg down. So trend is over, we test the high of the sell climax and then get one more leg down. 55, bulls are hoping lower low major trend reversal, but not really all that great. Big doji bar. 56, an inside bar, a bear bar closing near its low, but possibly just a second leg, not really that good of a short. 57, a reversal up, lower low major trend reversal, probably sellers above, scaling in higher. 58, consecutive bull bars. The reality is we're going to get back up to this close and back up to this, or at least the low, probably the close, because those are areas where bulls would probably buy. 59, a doji bar, or a bull doji bar, but in general, relatively disappointing bar. Then 60, a rally up to around the bar 53 close. 61, an inside bar, a high one for the bulls. They're maybe trying to close the gap at the bar one low, so rally back up into this area. 62, a bull bar, but below the moving average, and an inside bar 63, probably sellers above. This was a high one, this was a high one, so why are all your high ones bear bars? That's not that great. Breakout above the moving average 64, but it needs a lot of follow through, especially with the tail when it doesn't get at 65. Possibly 3 pushes up, 1, 2, 3, seems like a wedge to me. So probably sellers up in this area. Bulls need a dramatic breakout to get back up into this area. It doesn't look like they're getting it. 65, possible low 3. Then 66, disappointing follow through. And you can see the bulls trying to get a rally, 67, 68, but it become disappointed and give up 69. And then we go sideways the remainder of the day and close somewhat near the low. For stop orders today, you could have bought the close 3, 4, 5, 6. I probably would not buy the close of 7. I probably wouldn't. I'm not selling this until we get below the moving average, get a breakout with follow through. So you could sell the close 24. What I did today was I sold the close of 24 and exited above 35 for break even. And then I sold the close of 46 and just went for a measure move down and got it during 51. And that was all I did today. You don't really need to take too many trades. Yeah, and just focus on the best 1 to 3 trades a day. So you could have sold the close of 24 or 25, even 26. A little risky, but fine. I would not buy anything in there, really. Not that great. You could have, for a swing, you could sell 38 or 40, but better to wait for it to be clear. 45, 46. You could have sold the close of 45, but probably better to wait and see if you get follow through and instead of a violent reversal. Because sometimes you will get a violent reversal there. Instead, you get follow through 46. So then just parabolic wedge sell off. If you're buying above 52, your stock is wide. You're not buying above 52 after, how many bear bars is this? So a 10 bear bar micro channel with a lot of large bear bars closing near their lows. You're not buying above 52 with the stop below 52. You have to use a wide stop. And you could probably buy the close of 58. And that would probably be it for me. On the daily chart, oops. Disappointing, but are we going to sell off really far from here? Yes, bears are hoping low one short, so possible lower high major trend reversal. Probably buyers somewhere in this area. If not, if we go down, there'll be buyers in this area. Again, all these higher lows are going to be support. So I still think we're going to 6,000 before we're getting any sort of major sell off down in this area. This could be doing the thing. Over here, you can see we had an obvious magnet and then rallied a little bit, trying to trap traders out. We could be doing, we're selling off a little bit, trying to trap traders out before we go to the very clear magnet, which is 6,000. The weekly chart just closed. So the bears got a bear close. Good for the bears. Low too short. But if you sold below 1014, are you comfortable right now? No. The reality is next week will probably, and if not next week, the week after, we're going to rally up above this high. This isn't going to be the high. So bears are going to want a reversal down from 6,000. The monthly chart, the month is almost over, and you have to keep in mind 5808.75 is the open of the month. So we could easily fall below that. So the bulls are trying to get a bull close. The closing is near as high as possible, and the bears obviously would like a bear close. I think that is it for me for the day. So, all right, that's the end of the video.